Welcome, everyone. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome to another exciting episode of the What Matters podcast, where we explore the world of finance and beyond. I'm your host, Mike Mershazadeh.
And I'm Ashley Ward.
And today we're thrilled to have our guest, Benjamin. I'm going to try to pronounce this correctly. Is it Armellini?
Armellini. Pretty close. Yeah.
I thought the two L's were, it was a trick there. It sounded like a Y maybe. So yeah, my last name's Mershazadeh, so there's a lot of silent pronunciations there.
I'm glad you said yours first, Mike, because I wasn't going to attempt that one.
Ben is managing partner of Main Street Research Wealth Management. Ben is located out of Main Street, Greenwich, Connecticut office, and they have 3 additional offices located throughout the East and West Coast.
He's an equity partner and a key member of their investment policy committee, at the core of making decisions to benefit client results. It's a pleasure to have you with us today, Ben.
Oh, the pleasure's all mine. Thanks for having me.
Absolutely. Let's start right away with your journey. How did you find your way into wealth management? What experiences led you to your role now as managing partner at Main Street Research?
I think I got really lucky early on with just having a passion for numbers and working with people and having some family in the industry. My dad was certainly someone who has just had a ton of positive influence on my life, and he's been in the wealth management industry for a while. So when I was in my sophomore year of college, I guess, was chatting with him about the industry and got to do a couple different internship shadows. And then one summer I got very fortunate, and my family had moved out to California, and I was calling up all these different registered investment advisors since I had done an internship there and just knew that's exactly what I wanted to do. And connected with a man named James Demert, who's the founder of the firm I work with right now, and ended up getting an internship literally from just cold calling and showing up to an interview, evidently, as one of the few people wearing a coat and tie out in California at that point. And the rest is history. So I've been with the firm ever since.
How many years has that been so far?
I think almost 12 years now.
Wow. So let me ask you this. So you guys have grown the RIA to what, close to $2 billion at this time, if I'm not mistaken?
I think as of, I don't want to jinx it now, well over $2 billion at this point.
So tell me about that. When you joined the firm 12 years ago, or what was the size of the firm then, and growing it to where you got it now, how big was it when you came on board?
We were managing, I want to say about 750 million. I'll have to go back and find the exact number. Back then, what's really interesting actually, Mike, is that over that period, while we've grown a lot in the value of the assets, we have certainly increased the number of clients, but we're still managing hundreds of clients rather than thousands. And that's definitely been something that seems to continue to be a differentiator in the work that we do, just operating more as a boutique. So a lot of that growth has just come from, it's been a really nice secular bull market by and large. We've had some significant hiccups since 2014, but definitely been riding a really nice wave in the RA space.
Really cool. How many total advisors you guys have there?
So we have a team of 25 employees. The advisor team is 10. And one thing that's been interesting as we've just continued to grow and iterate and scale the firm is, of course, when I first started and you have 6, 7 employees at the firm, everyone's wearing a couple different hats. Everyone's an advisor on top of a trader and a few other things. So as we've just continued to grow and scale, really at the core of what we do, everyone tends to wear that advisor hat at the firm. We've really better defined the advisor role of, hey, this is your go-to person, but certainly backing into it, and I think leading with the client first experience has been something that's been really helpful in our growth, and also the way in which we've gone about scaling.
And let me ask you this. Have you guys grown the company all organically, or was there any mergers and acquisitions that went on?
No M&A. That has been definitely the hot topic in our industry over the past 3 to 5 years, but it's been 100% organic. The most significant change occurred 5, 6 years ago when our founder, James, went through the initial process of selling equity internally. And so now we're really fortunate to have a kind of committee of a few of us who are partners at the firm.
Oh, gotcha. When did that occur, by the way?
That occurred in 2018. And it's an iterative process. So I know we had a few new equity holders join the firm within the last 2 years, and it might be the case that we have more in coming years.
Oh, really cool. And what's the decision on is it his decision on who he makes a partner of the company, and what leads him to choosing the individuals that become partners there?
That's a good question. Ultimately, yes, I think as the largest shareholder and also just being a founder of a business, um, I can't speak for James, but I would say that there's definitely some common traits of those of us who are partners at the firm. Certainly, just having the tenure is important, but beyond that, just having a real passion for the business, and I think finding creative, different ways to go about best serving a client. Maybe there's a new way in which we can serve clients that just completely changes the game, and or just finding creative new ways to help grow the business.
Real cool.
Very cool. And so I'm curious, when you joined the firm, it was James and how many other individuals were already working at the firm?
5 others were working at the firm at the time, and then I started alongside my colleagues Natalie and Stephanie. I think we all got hired within a month or 2 months of one another, and everyone, they're still at the firm with me now too, which is really cool.
Oh, wow.
Very cool. Love that. Um, so tell us, Ben, what are some of the most valuable entrepreneurial lessons you've learned along the way? Any advice for aspiring wealth managers looking to navigate challenges and seize opportunities in the space?
That's a good question. One thing I always think of, and James said this to me a long time ago, is the phone's not heavy, so don't be shy about picking it up. And that's definitely been one of the biggest things, at least in the whole experience of joining a RA, particularly a boutique, has been entrepreneurial. But I would say certainly this experience of helping expand our brand on the East Coast and literally going into a marketplace where few people, 5 years ago knew who Main Street Research was or is, and now we've seemed to just driven a ton of traction over that period. Really just not being shy about networking, picking up the phone and calling people, whether that's clients, business partners, or great people like the two of you, just getting out there.
Well, let me ask you this. So, um, you guys expanded your footprint into the East Coast. Was that because you're originally from the East Coast, or if I'm not mistaken, or you just go to boarding school in the East Coast?
I just got shipped off to boarding school. No, I wish I was that smart to play the chessboard that long. It really was the case where during the pandemic, a couple of months into the pandemic, we'd been discussing how do we expand the brand. And at that point, as I'm sure as many people remember, there wasn't as big of a need, or there was a little bit more concern about, hey, are we ever actually going to go back into office? So we got this really interesting window of opportunity to go out and really test another marketplace. Luckily, a lot of our business is in California. So if you're on the East Coast, um, the time difference is actually advantageous. If you're
Yeah.
getting up earlier on the East Coast. So it's a good way to kind of test that market while also making sure that we're present on the West Coast. And then I would say about 6 to 12 months after being here, we learned very quickly that there's an appetite for the work that we do and some of the differentiators that we have as a firm.
So when you said that James has said the phone's not heavy, pick it up. Is that how you guys have grown to 2+ billion? Is just was it referrals or dialing? How did that come about there? Was it any advisors you hired that brought clients on? How did the growth occur there?
That's a good question. So since we've done no inorganic, so basically no M&A, there's been a couple of different ways. The first is really specific to, I think, why people come and work with us, which is have a really good service. Beyond having some of the really great capabilities that we do on the wealth planning side, talking, estate tax planning, all that good stuff, differentiating ourselves on the investment front and being a company that actually invests in individual businesses. So having holdings of companies, I'm sure many of us on the call know and use today, and leading with having a really solid investment platform and foundation was crucial for that. We have also had a very long-standing relationship with Charles Schwab, and we're part of a distinguished network called the Schwab Advisor Network. And so that has also been a really huge avenue of kind of growing together and with Schwab. So I'd say the combination of having a really strong offer and coming back to best serving the client, working very closely with our business partners at Charles Schwab, and then just having a more pronounced media footprint over the past 3, 4, or 5 years has also been huge for getting organic business. I know James, our founder, and a few of the portfolio managers, myself, Lily, often will, get asked to do things like this or go on TV and speak. And that's been really, really helpful for the brand of the firm that James has definitely been leading the charge on.
So when you say Schwab, is it their BDOs refer clients to you guys or how does that?
Good question. So if you, Mike, walk into a Charles Schwab office, really anywhere in the country, and you say, hey, I have X amount of money, I'm looking for Y and Z as services, someone at Charles Schwab will be able to sit down, they're called financial consultants, and be able to articulate, hey, what is going to potentially be the best fit for you? And there's a lot of different options, of course. I mean, we're talking about a multi-trillion-dollar custodian, so they've got a lot of different options and solutions. One of them is to work with third-party independent firms like ours, so a third-party RIA, a fiduciary, who maybe specializes in things that are different. So if a client's looking for performance-based fees or individual securities, comprehensive wealth planning, maybe that consultant would say, oh, we've got this great partner, Main Street Research. They're not owned or operated by Charles Schwab in any way, shape, or form, but they can help manage your portfolio and those assets stay custodied at Schwab. And that's been a huge, just look at the flows going into Charles Schwab, for example, over the past 5-10 years. That seems to be a really big change in the industry as more capital is flowing into the RIA model and maybe out of some of those traditional wirehouse models where there's a little bit of conflict of interest potentially. And clients just love the fact that assets are held custody at Charles Schwab. Their financial consultant doesn't go anywhere. They stay very involved in the relationship. There's just this third-party firm that specializes in asset management, financial planning, that can come in and help solve.
I want to ask you a little bit about, yourself. How do you measure success as a leader in your role in the financial industry? You're a managing partner of your firm. So, and in addition to this, I would like to know, how many of the 23 employees are split up between East Coast and West Coast, but we'll get to that.
Yeah.
How do you measure success as, a managing partner of a firm like this?
So it's a really good question. There's of course all the different metrics that you can look at of how to really define success at the client level, at the advisor level. How much is the business growing? How much are we? What does our client retention look like? Those are things we really pride ourselves on. I'd also almost back into it more on like this empathetic level of one thing we do at the firm that I love and we've done forever is when we get really, really positive client feedback. Someone in operations did something that was just like a wow moment for the client, or an advisor was there for a client during whatever experience, good, bad, and really came through big. We'll always share that with the entire team. And to me, that's been a really good way to orient the success of the firm coming back again to what are we doing for the client experience that's differentiated. I think a lot of people get lost in trying to measure themselves to numbers, and if that's like your North Star, I don't know, maybe it might be less fulfilling in the work that you do. And I think we've always found that, hey, if we're really passionate about the clients that we're serving and we're trying to do what's right for them, then all the other good stuff related to growth is going to follow.
Absolutely. Yeah, I was just going to say, I think that, the real happiness and joy of work or anything, it really comes from like the feeling of making an impact and the value you're adding to others outside of just yourself.
Yeah, and relationships too, right? I'm sure two of you see this respectively on a day-to-day basis, and I know the team you work with is fun back there, but it's all about relationships. They run the world.
Absolutely.
So do you guys, when you guys bring on, when your advisors bring on a new client, I know for myself that, my financial advisor was a referral from somebody else that I know, right?
Yeah.
Through my Tiger 21 group. And that's how I got linked up with my financial advisor, and over there at Westwood. And so do you guys get a lot of that type of referrals that come in? Is it either, through business groups or families, that refer other family members or friends, or, how does that come about?
That's a great question. So a lot of different avenues. I would say clients who are just delighted with the work that we do, referring friends, family members is a huge source. The Charles Schwab Advisor Network has also been a massive source of growth. We do one thing that is kind of different than what I've seen in the industry, which is oftentimes if someone inquires about joining a wealth management firm, they're going to hear immediately from a business development person, and that's the person who's going to cultivate and kind of try and drive that relationship in the door. And one thing that we do that's a little bit different is we'll always send a senior partner into that first meeting to help with the process of let's really make sure that this is a good fit for the client, and also have someone in that room who's actually going to be managing the assets, oftentimes alongside an advisor, just depending on complexity and all these other things.
I like that.
Yeah, so it sounds like, you guys your clients have their advisor, but it's almost really like a team effort. Everyone is kind of in there working together for each client.
Exactly.
Or explain that a little bit more to me.
Really, yeah, exactly, Ashley. The advisor's the liaison of communicating everything that's going on. But from the investment process to the types of communication, it's consistent across all clients. We want all clients to own our best investment ideas, unless someone has a constraint where they don't want to own an oil company or something like that.
And let me ask you this: what do you think the plan is for Main Street in the next, call it, 5 years? You guys have already established a footprint on the East Coast. As you have a few partners there now, and I think that was very, very smart for the founder of your company to make you guys partners, so that you guys don't leave and go start your own thing, because at some point, everybody wants more, right? And so with everybody maturing into their roles, and you guys already having this East Coast presence, what do you think it looks like in 5 years from now?
Bigger, definitely. And to do that, what we've been really focused on in the near term has been just finding the best talent to come join our team on this mission. We feel like we've got a really good mission. We work with great people. The business has been growing at a really nice rate, and really just want to be intentional about the way that we are growing, and making sure that the core ethos of the firm and really what James founded it on, and a lot of what we've chatted about today, right? Continuing to be a boutique and how we operate, but do so with scale. That's definitely something we're leading with.
So when you say find the right talent, how do you guys go about doing that? Do you guys, hire individuals that are, I'm not going to say out of college, not the Edward Jones model, but or do you recruit advisors from wirehouses? how do you go about? Do you prefer that they don't come on with a book of business already, or can you explain how you guys bring on new advisors there?
I would say we're really open-minded. I mean, there's a lot you can learn from people like Steve Jobs, right? And how important it is to recruit. And for a lot of firms as they grow and scale, I mean, that's kind of the most important job of a CEO in any business, is just making sure that the talent's really high. So with that said, Mike, I mean, we go everywhere. We've actually hired, myself included, 3 interns. So we have a really robust internship pipeline. That's something that we have interns every single year, usually 1 to 2 of them. And it's a really focused time where ideally they're going to be a good fit and potentially someone that we'll hire. So we're certainly open to hiring people right out of school and kind of teaching them the Main Street way.
I
We've
like
also
that.
had some really great advisors. My colleague Jacob was working at another much larger firm for a number of years, and we hired him where he had some experience. So I think so long as the person really is, again, mission driven and seems to culturally fit in with what we've got going on here, then we're totally open minded.
Really cool.
Yeah, I think that cultural alignment is very important. I feel like most people we have on the show here, we talk about, it's really about holding those values of the company like true and continuing to lead with those values and bringing people on who match our cultural fit in that way. And sounds like I want to ask you, was it you started as an intern, and has it been 20 or 12 years? I might have
12, I know,
Well.
despite my hairline.
But it sounds like, you and many of your other colleagues there, it's been, the retention has been great. So back to the question I asked earlier, you guys had your presence on the West Coast, and then you just began your presence more recently on the East Coast, but you already have 3 offices on the East Coast, if I'm not mistaken, right? And so how's that
Yes.
kind of divided up? Like, how many advisors are on that side of the country and the other?
So the firm was in California, or still is. Our headquarters still in beautiful Sausalito, California, that we were chatting about before this, Mike. Since I know you spent a lot of time out there. So firm is out there for 25 years. We create East Coast presence about 5 years ago, and since that period, I've opened up a couple offices in the area. 6 of us here on the East Coast, and then remaining balance is back on the West Coast. And really, the headcount back west is more, a lot of that advisors, but all the plumbing of the firm, if you will, to trading operations.
Oh, gotcha.
Very cool.
Yeah.
So looking ahead a little bit, what do you see as the future of wealth management? You shared a little bit about what you see as the future for your firm, but what does the future of this space look like to you? Any insights on trends, technologies, and strategies that you think are going to shape the future of this industry?
I'm sure everyone keeps talking about artificial intelligence, and that's something that can't be ignored.
That was my next question for you. So you roll into it.
Yeah, it's something. I mean, we've had these robo advisors out there for the better part of a decade, and that didn't necessarily take on as much attraction as I think a lot of people are saying, hey, the advisor role is going to be replaced by technology. And at least as far as we've seen it, the complete opposite has actually been true. So I think what we're thinking about is, what are firms that can leverage the best technology out there? How can they leverage artificial intelligence? I mean, we've updated pretty much all of our systems within the past 5 years, really to stay on the front end of technology. So my bet would be that it's the firms that are able to implement and integrate technology with just really great people. That combination seems like something that'll be a winning one for years to come.
I can't agree with you. I can't agree with you more there, because obviously artificial tech, AI, it's a tool. It's not a replacement.
Right.
And I think that when people talk about it, like, oh, the AI is going to replace the advisor, I think it's almost insulting, because it's your look, your advisor, that's a relationship that you have with that person, right? I mean, I could tell you that, when I talk to, my advisor, we talk 75% family, art. We're both art collectors. Um, you know, uh, we talk about 75% personal, and then the last 25% is how I want to allocate my money for the quarter or the year. And so I know AI doesn't have those type of conversations with people. So I think when people say it, I feel like they're discounting, the personal connection that the advisor has, with their clients. And I certainly don't think that AI is going to originate new clients. I agree with you there.
And
The
yeah,
utilization of it is what's going to make your job easier. But there's no replacement there.
totally agree. And a huge part of our business is not even related to anything that artificial intelligence can do, which is more on the behavioral side of things. And that's, oftentimes a huge part of the advisory role is, as much as it's our responsibility, fiduciary and otherwise, to make great investment decisions. It's when the client calls us panicking, and the market's at a low or something, and they're like, "Oh, I want to sell everything." It's being able to coach them through those moments that, if you are just relying on a robo system and you just see your accounts down, X% with no context, that's definitely something that I think has made a lot of those flows come back into managed solutions.
And I got a question for you. Ultimately, on every podcast, Ashley and I always walk away learning something, right? And you know, I had no clue that, what, 25, 30 years ago, most everyone worked for the big wirehouses, right? And
Yeah.
Having an independent RIA was just not that common. Now it's about, from what I've been told, about what, 33 to 35% of individuals are independent, like yourself. Where what's your opinion on that? Where do you see that going? I mean, do you think that's going to continue to increase?
Yes, there's some nuance in that answer, however, because what is interesting, and at least what the data seems to be showing, is there's less, um, I think, less frequent RAs that are being opened up kind of standalone, starting at $0 assets under management. There's a lot more of what you alluded to, Mike, which are some of these advisors who maybe worked at one of the big um, wirehouse firms, taking that book of business. Now they're going out and starting their own RIA or getting recruited to just join some of these big RIAs. I mean, there's a number of people who have done that very, very successfully in our industry.
Yeah.
So shifting gears a bit, Ben,
Yeah.
what investments or sectors are most exciting to you right now? What do you see for the next wave of wealth creation?
So our team has definitely had kind of both feet in the AI wave, and that's been the case for the better part of since last October. The way in which we think about investing is really top down, thinking about it from a macro standpoint. So we've had this massive paradigm shift where interest rates were at zero for 15 years. They went up. They are likely going to be subsiding, but at a glacial pace, maybe, rather than like this light switch approach, which a lot of people have been speaking about. So there's been a huge shift in really asset classes, and at least from our um, perception, what capital markets are going to return in the future. In short, we're as optimistic as we've been in a really long time. And for people who know our firm, they know that we're not always that way. We're, I think, one of the relatively few firms that are active in our space where we're able to take client asset allocation if it's someone who can and maybe should be fully invested in stocks during a bull market. We're comfortable taking that stock exposure down dramatically. It's something that's gotten us through really difficult markets in the early 2000s, 2008, even as recently as 2022. So as we really have been more fully invested over this period, we think it's an AI-led market. There's obviously the Magnificent Seven, I guess Magnificent Six now, leading the charge there. But you've also seen artificial intelligence permeate into companies. I know, like, one of our holdings, Intuitive Surgical, it's in the healthcare space. AI is really iterating and permeating throughout all the sectors, all 11 sectors of the economy. And those are the types of companies, management that's either has been adopting that, or you're just starting to see it show up in corporate profits. And so we're really excited about what this next bull market looks like for markets. And we think we're in the early innings right now.
Wow. I like what you said about the light switch approach, right? So, I would say lastly, let's touch on the broader economic outlook, right? I mean, we've seen in the last couple of years some really crazy thing that's gone on. As you said, we've had 0% interest rates for so many years. I mean, the 10-year Treasury bond, having been an ex-mortgage guy, we always had our eye on that, right? And that that hit 0.5% during COVID. Ultimately, that went to 5%. It's gone down to, I think, 4.1 or 4.2 now. Last I looked. Lots of money's been lent out. I like what you said about the 11 sectors seeing what AI has been able to do from a profitability standpoint. But what's your economic outlook there? Do you think it's the market trades sideways but relatively up for the next 7 to 10 years? And when you said the not the light switch approach with the interest rates, but maybe the interest rates obviously are not going to go back down on the 10-year, right, to a 0.5%. But I use the 10-year as my benchmark because that's one I know the best. But do you think maybe like home mortgage interest rates, maintain that 5 to 7% range? What's your thoughts there?
So one of the big question marks that will answer all of those questions is, what does productivity look like over the next decade? And from there, you can start really backing into any and all capital market assumptions. You're absolutely right, Mike. The idea that interest rates are going to go back down to 2 or 1%, let's hope that doesn't happen, because if it does, it means that something really bad has happened at the economic level. Our perspective is that you have a really healthy global economy, maybe ex-China, which I know is the second largest economy in the world. But what we have seen is just a completely robust, particularly US-led global economy here. We have growth rates, whether you're looking at GDP numbers, PCI numbers, that are as good, if not better, than where we were before the war broke out in Russia and Ukraine, basically the previous all-time high of markets. And a lot of valuations, particularly at the corporate level, are extremely reasonable right now. If you're looking at, for example, a market cap weighted index, so you have Apple is almost 10% of the S&P 500 right now, market cap. If you look at that versus an equally weighted index where Apple is the same as JP Morgan and Visa and all that, there's a very significant difference in the valuation of those two indices, really meaning that those 7 largest companies had really created the bulk of returns over the past 18 months. So if we are right that you are seeing this rising tide lifts all ships economic cycle, there's a lot of value out there in addition to those big 6, big 7. We're shareholders of the big 6. We do not own Tesla's only one of those that we don't own, which, look, you're smart, has been a good thing. So we're really optimistic about where we go from here. In regards to your question around the credit side of things, we are definitely advocating for our clients here, where if they need fixed income as an asset class, again, an asset class that's going to reduce risk in the portfolio, we're really encouraging stretching out duration here, which simply means going and buying bonds that mature 5, 10, 15, 20, 25. We've even bought a bond that matures out 35 years, yields 5.5%, 6%. And for some of our clients, they need about a 5 or 6% rate of return to make their plan work. So definitely last year we did a ton of work on the credit side. We're definitely pounding the table and saying good time to stretch duration on the credit side of client portfolios. And then in terms of the equity selection, certainly want to be riding that AI wave.
Oh, cool.
Well, I think that wraps us up for today. It's perfect ending there. Thank you so much for joining us today, Ben. It's been a pleasure. We really appreciate you sharing your insights and your knowledge with us and our audience. And we're looking forward to what's to come for you and Main Street Research in the future here.
Well, thanks for your time. Love the podcast and appreciate you guys having me on.
We appreciate you
you.
joining us today.
Yeah. And to our listeners, stay tuned for more episodes on What Matters podcast, where we uncover what really matters in finance. Thanks, everyone.